Welcome to stockmarketpunting.com. Once again, it's a weekly chart of the Dow. And we showed the daily, and I believe we showed the monthly chart in the first video of the Dow. Part 1, Part 2. Okay, go to stockmarketpunting.com, to the website. We also got a complete history of these indexes from last Saturday to this Saturday. And it's for our training students. What I'm going to show is that we talk about trend reversals. This trend on a weekly level is that we reached a peak of 93.85% overbought on the Dow. Prior to that peak was 91. And on the counter trend, we reached the final peak of 93.85. Now we're at 90. The thing I want to show is that trends start like this. You went down, you went up, and you ended the week down. The low of the Dow, and it's only 30 stocks. This low, the previous inside week, which is last week, low is 10977.85. Notice that this low here is 10965. It's a lower low. Now, granted, we have the last week's high at 1205.64 on the high. And on this bar here, this week's high was where they came back in and ran the 30 stocks up. Dow Components reported good earnings and whatnot. And the peak now is 12.58 of the high of that bar. Going forward, if we close below half of this weekly bar, I'm going to draw a trend line of the reversal bar right there. This happens to be at 1119.45, half of the down move. Okay? And if I close, and that is my upper, that's where we took out the lower low last week. We went lower. That's the final reading. This is the beginning of a market top. Earnings are winding down, and basically this market doesn't got no support till it gets down to around 10.8, half of that bar, which to the top of that bar, that breakout weekly. So what traders will look at is that stocks will trend lower, and stocks are always buyable off the bottom, but you'll be shorting a lot as long as the indexes can't take out and close above half of their last weekly down bar. Okay? And the peak in the indicator here is, here's the peak right here on this called moving average convergence divergence. And my goodness, it hit 355.74. Right now, it's 351.58. As long as this weekly reading is weaker than the prior week, that means any up move will roll over and will be weak. Because if these we have a mathematical system over a 30-year period that Mario Marciano developed, back tested for 20 years. And I can tell you that in the school you learn a lot of mathematical equations, and we have it in our new pro trading platform that we have. And I peaked, this peaked at 93. It's lower than the previous week. Percent DA, slow stochastic, 88.5. When this crosses over this number, that's that green line. And if this mathematically goes lower, that means that this market is in a pullback. I didn't say that the trend's going to go straight down. It's in a pullback. It's very exuberant. People have been chasing the market. Part of exuberance is it pulls back, I got to get in, it goes higher. Pulls back, I got to get in, it's got to go higher. Pulls back, I got to get in, I got to go higher. That's what's been happening. Now, when I called the low here, and I did back on 2/7 in February on the Dow, I said we were putting in a low, and that the market wasn't going to go any lower than that 9,900, and it didn't, and we were right, and we I've traded the up move. Now, basically, what I want to tell you is that divergently, We're at 90 here. We're going to be watching everything that we have to watch, as the green line is a 200-week moving average, and we're selling below it. Support is going to be here at the 10-week moving average. This is this number right here, 10-week MA, okay? And I'm going to have to get the info panel a little bit spread apart here. So the CCI, if it keeps going lower, that goes lower. This crosses over our first area of support. It was around 1085 on the Dow. And we would see if we would bounce to a lower high and then roll over and come all the way down to 10.6 on the Dow. We'll be updating our master pro traders, senior traders, investors, and whatnot as to what the whole mess will be like. It's the beginning of a reversal, but people are very exuberant over the economy. We're in a great recovery. Stimuluses are working. Numbers are coming out better, which is all true. Earnings were good, which is all true. The thing about it is that we're overbought. We got to come down, and if we bounce, then we would say where we would break that high. And it's not out of the ordinary that a total V shape in the indexes, economies, everybody talks about V shape. Well, indexes have got V's shape, economy have V shape patterns. Here's the full V from the swing high to the low. That would take that all the way right there. That's the broader V. Right now, you've got another V right here, which is this breakdown over here. You've got another V that comes right at 12,000, and that would be right there. And basically, once again, I'll take it out. Total V, total V. V to this area here. There's another V, 13,000 on the Dow. Is that V? Lower high than that one. We have another one too, which is right across here. And that's here would be this other V, part of the overall top V down. Mathematically, we've come this far. We called the big bottom off the low. Right now, we're in the beginning of another pullback. And we had the pullback there on the down. We made the higher high. We had pullbacks over here within the 2009 cycle, and we made higher highs all the way up. So pullbacks and total reversals are two different things. As a trader in the SMF Pro Trading School, is that we short pullbacks and then we buy to go long. And we trade both sides of the market. So if we're short, we are short up here, and we come down here, we would go long here, let the short stay in play up here. If we bounce, we take the profit off the short, let the long bounce. And we'll deal with that stage when we get there. That's the weekly Dow chart.